Hello, happy Tuesday. This is Ariel. Welcome back. So today is an unscheduled stream again. I'm in a rush to stream because the Fannie Mae has released the new limit today for the 2022 loan limits. So I posted a screenshot of what the new 2022 loan limits are for conforming high balance, and there are some people who don't understand or don't know how these conforming or high balance or even jumbo loans means to them, and how does it impact their rate, their monthly payment, and how does it change from from year to year. So I thought I would do this stream to explain this to everyone so that we're all on the same page when you do your loan in the future and you know what kind of loan amount will benefit you. Okay. Before I go further, as usual, I haven't do a stream for a long time, so I'm kind of not used to this, but I'm gonna check my audio. Okay, audio works. All right, so I started with the S&P 500 index. So S&P 500 dropped 1.9% today, but the rates are good today. So I thought it's a good time to kind of talk about interest rates and also the new mortgage limits and how does it look for anyone who's looking to do new purchase loan or refinance or cash out in 2022. Okay, so let's start with. Let me open the or the picture I posted today. I posted a post in this morning on my YouTube channel, and this is what it said. Okay, so FHFA official loan limits for 2022. Let me just go ahead and first explain what FHFA means, okay? Because that's an acronym. And basically, let me go to the Investicopedia. I think that's a good place to have this explained. So what is FHFA? That stands for Federal Housing Finance Agency. Here you go. Federal Housing Finance Agency. They're the one that can define the loan limits every year and tell you how it's going to be for. Actually, it's going to be the loan limits is different per area where you stay. So I'm going to be mainly focused on the Bay Area in California because I am a California loan agent. So I'm most familiar with this area. And the Federal Housing Finance Agency is an independent federal agency established under the Housing and Economic Recovery Act from 2008, when we had a mortgage and housing crash. And their responsibility is to oversee Fannie Mae and Freddie Mac. So Fannie Mae and Freddie Mac are the biggest secondary mortgage buyers, and usually all the loans that you get from like the big banks such as Wells Fargo, Chase, you name it, all these big banks, eventually they like to sell their loan to Fannie Mae or Freddie Mac, and that way they can get their money back, and then they can give more loans out. So that's one way the banks get to make money and then also free up their funds so they have more money to loan to more new people. I hope that makes sense. And I guess I can go into explain Fannie Mae and Freddie Mac a little bit more because that's the foundation. Before we go into talk about the conforming limits and how high balance limits and all these limits, they're all very related to Freddie Mac and Fannie Mae. Okay, so Fannie Mae and Freddie Mac are federally backed home mortgage companies created by the U.S. Congress, and then that's why I say they're the biggest issuer of the secondary mortgage market. So neither institution originates or services its own mortgage. Instead, they buy and guarantee mortgages issued through lenders in the secondary mortgage market. So I'm not going to go into the history of these two companies. They are companies, but they are backed by the U.S. government. So if you're interested in reading more about the history of Fannie Mae and Freddie Mac and how they were established and everything, I can post the link to this Investopedia link in the description box so that you can check it out later. Um, my whole point is to tell you what Fannie Mae and Freddie Mac are, and also FHFA, which is Federal Housing Finance Agency, and how do they define all these loan limits, and how does these loan limits impact you as a borrower, or if you are trying to get a loan or you currently have a loan, well, usually loan agents like to call our customers also as borrowers because you guys are the one who are borrowing money from the bank to loan your residential home or your investment home. Okay, so with that all said, let me go into explain first what are the conforming loan limits, because we will start with just three. We will only go through three buckets today: conforming, high balance, and jumbo. So this picture didn't say jumbo, but I will tell you what it means when we get to that category. So let's go in order and start with the lower loan amount first, which is conforming loan. And the units here, you see 1, 2, 3, 4. It literally means 1 to 4 units, and we call that residential. So usually, at least the mortgage broker that I work for, which is also we do in-house lending. So basically, we fund you the money for the loan. That's what called in-house lending. So similar to big banks like Wells Fargo, Chase, they will lend you the money and they will fund you the loan. Fund you the loan means give you the money for the loan. And then that's also what I'm working for. I didn't work for Chase or Wells Fargo or any specific bank, but I work for a mortgage broker. And then we represent many banks, including Wells Fargo, Chase, and lots of other banks, so that we can get the best rate for your situation. And also we can cover more cases, including harder corner cases. Yeah, so that's the benefit of working for a mortgage broker. Okay, so background information is set, and let's go into conforming loans and what do they mean. I already have this pulled up. Conforming loan is a mortgage that meets the dollar limits set by the FHFA, which is now the limit is for 2022. Oops, sorry. My memory for the computer is running low. Okay, the 2022 limit for conforming, if you have one house, or basically you have one house, it's 647,200. So if your loan amount is under this 647,200, you are qualified for conforming limits. And the key takeaway for conforming limits, a conforming loan, or I use the word limits and loan interchangeably. Basically, it's conforming loan is a mortgage with the terms and condition that meets the funding criteria of Fannie Mae and Freddie Mac, which was explained earlier. And then conforming loans cannot exceed a certain dollar amount. We set the certain dollar amount for 2022. It's 647,200. And then in 2021, in most parts of US, it was 548,250. So what does this mean? It means that this year in 2021, if you got a loan higher than this amount, so if say that you got a loan like 560K or 570K or anything higher than that, you didn't get a conforming loan. And what does it mean that how does it matter to you? So conforming loans are typically, sorry, that's the box fell off. Okay. Conforming loans are typically offering lower interest rates compared to other types of mortgage, and that's comparing to like high balance or jumbo. So if you have a conforming loan, that means you qualify for a lower interest rate and therefore a lower monthly payment. And then lenders prefer to also issue conforming loans because they can be packaged and sold to the secondary mortgage market so that they can be bought by Freddie Mac and Fannie Mae. Okay, so I already talked about why lenders want to sell their mortgage to the secondary mortgage market so that they can free up more money and then loan to newer people, newer customers. So that's conforming loan, and that's the difference. So you can see that because of the how, I don't know if it's really because of the solely reason, or there's so many reasons why FHFA will increase or decrease the limit. But we all know in 2021 in US, the housing price on average increased more than 10%. So that means the loan amount usually is higher too. Like because the housing price is higher, people need to loan more money out to afford a house. And I think that's one reason why they increased the conforming loan limit. So that means actually for my mortgage broker, which is says Gogain, that's my broker's name. So for my broker, right now you can already qualify to get the rate for 647 200 now in November and December. You don't have to wait until 2022, which is a head start for anybody who wants to do a refi or purchase a new home that's under 647 200 this month or next month. Also, entire 2022. Okay, so after we talk about conforming loans, we can talk about the next level up, which is called high balance. So the three loan limits we talk about, it's the lowest one is conforming, second highest or second lowest is high balance, and the highest one we'll be talking today is jumbo. And then there's higher ones, but we're not going to those because those are corner cases. Usually people don't loan that much money unless you're in the Bay Area. Actually, there are people who loan super jumbo loans, quite a few of them actually. Okay, so high balance limits is rise to 20 not sorry for 2022 is up to $970,800. So before we talk about the limit, maybe I should explain what is a high balance loan. So I look up, there is a lot of websites you can look these up. So I figure I'll just use what they have and kind of read it to you, but also explain my own words. So a high balance loan is the one that exceeds the national baseline for a conforming loan. In other words, it's higher than conforming limits, which is 647 200. So that means if you have a loan amount more than 647 200, you are in the high balance limit. But also falls within the local conforming limits for your high cost county. And Bay Area is definitely a high cost county. So is SoCal. So in California, we often fall into high cost county. And high balance loans are considered conforming loans with respect to Fannie Mae and Freddie Mac. And then Freddie Mac refer them as super conforming loans. And the lending criteria for this loan amount. So if you have a loan amount or you want to get a loan more than 647 200 and under 970 800, so within this gap, then there's a criteria. Usually you have to have a credit score of at least 620. Depends on your down payment size and cash reserves. And then you must make a down payment of at least 5% of the home appraised market value. Your debt to income ratio, the percentage. So debt to income ratio is the percentage of your monthly pre-tax income required to cover your mortgage payment and other debts cannot exceed 45%. So there's actually, let me just kind of stop and talk about the DTI or debt to income ratio, because this is what the loan agents look at actually in the very beginning when you want to get like a pre-qualification letter or when you want to know how much you can get a loan for. You usually go to a loan agent and then and the loan agent will ask you some basic information like what kind of house you want to buy. Is it a 1-unit residential, 2-unit residential, or is it an investment home? And then what's your credit score? and what is your DTI ratio. A lot of people don't know their DTI ratio, so the loan agent might not ask for your DTI ratio. They will ask something about what is your salary or what is your base pay, and then what are your expenses every month. Do you have a credit card you need to pay? Do you have a mortgage right now? Do you have a car loan? So they kind of ask for like your big payments, and then so the loan agents will write these information down, and then they will do a simple debt to income ratio calculation for you to see what is your amount of DTI. If your DTI is more than 45%, then it's harder for you to qualify for a high balance loan. Yeah, so basically the loan agent will take your total expense and then your total income and then do a calculation to get your debt to income ratio. So that's why they ask you, just for your background information. And then qualifying for a high balance loan from Fannie Mae come with a couple of extras criteria. And then remember, Fannie Mae is not your only option. There is also Freddie Mac. So it depends on really the loan. What loan did you get? And then that's going to be different. So all loan applicants must have credit scores. And then standard conforming loans allow for a process known as manual underwriting. Actually, there is still a lot of manual underwriting to be done today, even though there are automatic ones as well. Even though there are automatic ones, there's still usually some type of manual underwriting coming to play towards the end of the loan process. Unless it's a conforming loan, then if it's a conforming loan under 647-200 that we talked about, then it might be easier for the underwriter. So which evaluates applicants or borrowers' credit worthiness, even if they lack credit reports needed to obtain a credit score. Fannie Mae use automated system that require all high balance loan applicants to have credit scores. So high balance loan borrowers don't have access to Fannie Mae 3% down payment loans, which is FHA loans. So if your loan amount is in the high balance category, which is between 647-200 and 97800, then high balance loans. Sorry. High balance loans, you don't have access to Fannie Mae's 3% down pay. Okay, so that's high balance loans. I'm not sure if I make sense to you. It might be overstating too much information that you don't need to know, but basically, usually the borrowers who come to us to want to get a loan or cash out or refi do have a credit score, and their credit score is usually at least 680 or above. So all these criteria don't really matter to you. You do qualify. And then there are special corner cases like foreign investors, and then if you want to buy just an investment home but you don't have stable income, a lot of corner cases that we can talk about. So you can email me and I can try to answer all your questions and get a quote for you. Okay, so high balance loans limit is 97800 for 2022. And then what is the loan after that or beyond that? So if you have a loan amount more than 800, so that means if you want to have a loan of 1 million, 1.5 million, then you will be in the jumbo loan category. What is jumbo loan? Jumbo loan, Investopedia also have it explained, so and with key takeaways, so it's very good summary. I'll just read it from here. It's much easier to understand. A jumbo loan, also known as a jumbo mortgage, is a type of financing that exceeds the limits set by FHFA. So that's why it's not on this graph or picture, because it's already exceeded the loan amount set by FHFA. Unlike conventional loans, a jumbo loan is not eligible to be purchase guarantee or securitized by Fannie Mae or Freddie Mac. It's designed to finance luxury properties, But in Bay Area, I'm laughing at this because in Bay Area, it's not luxury property, it's just normal properties, but it costs 2 million, 3 million. And homes in highly competitive local real estate markets like the Bay Area. Jumbo loans come with unique underwriting requirements and tax implications. These kind of mortgage have gained traction as the housing market continued to recover from the Great Recession. The key takeaway for a jumbo loan is hang on. A jumbo loan is a type of finance that exceeds the limit set by the FHFA, and it cannot be purchased by them and guaranteed or secured by Fannie Mae or Freddie Mac, so it cannot be sold to them. And then homeowners must undergo more rigorous credit requirement than those applying for conventional loan. That's what they say, but according to my experience, the borrower actually just need a credit score of more than like average 750 or above or 730 or above is fine. And then approval requires a stellar credit score and very low debt to income ratio. Very low debt to income ratio. Hmm. Take it with a grain of salt because this is from Investopedia, so it's different from each lender. And then I've seen a lot of cases is different. And also it depends on how much you make, right? In the Bay Area, there's a lot of people that makes a tons of money. So that means they can have very low to debt to income ratio. And then the average APR for jumbo mortgage is often par with conventional mortgage, while down payments are roughly 10 to 15% of the total price. I still see a lot of jumbo mortgage going for 20% down, 25% down, 30% down. It really depends on the borrower. How much do you want to loan? So depends on your house price and how much you actually want to loan. That's going to impact your rate and also your monthly payment. So everybody's case is different. It also require you to ask the loan agent. So I welcome everyone to ask me about any kind of loan you want to get, whether it's conforming or it's a high balance or a jumbo loan. We all have those covered, and I can do quotes for you. So yeah, I think that's actually all I have to share in this quick stream. I hope this is a quick stream. I don't anticipate this longer than 30 minutes, this stream. Basically, it's just to kind of talk about what the limits are and what they mean. These limits have all gone up. We talked about that the 2021, which is the current year we're in, the conforming limit was like 548-ish. So it's increased by 99K for 2022. And then the high balance also increased. So if you have a loan amount in this category, and then you refinance in 2021, you probably can refinance again in early 2022 to try to lower your rate. Depends on when you did the refi this year, and that's probably a good way to lower your rate because now you qualify for the conforming instead of earlier in 2021 you qualify for high balance, which is a higher rate typically. Okay, so that's just some ways to kind of tips to save you money. And also if you are trying to get a loan or thinking about refi or cash out, here's just some information for you to know. Okay, so I thought I'd just pop on today, quickly explain this to you. I actually need to run to another appointment. So that's it for today. And I'm actually working on another video for you guys to talk about my real estate investment and how to manage investment remotely, far, far away. I have a lot of audience or viewers who ask me questions like, how do you manage real estate investments? Don't you feel it's insecure? You can't control it, you can't see it. How do you handle it? So I got a lot of those questions. I didn't answer each one, so I thought I just did a video to answer it, and it's now in the making. I already recorded it and I start editing it. I hope to have it online by Friday or Saturday, so stay tuned for that. And I will leave my contact information in the description box. I also created a post today about the new limits for 2022. And this video has explained how you can benefit from the new limits. So I hope you enjoy today's information. It is a live stream, so I might be kind of going like my thought process. I don't know if it's all clear because usually when I record a video, I say it in so many different ways and then I cut out the ways that I think is not the most intuitive. But since it's a live stream, I couldn't cut it out. So any questions, please leave in the comments or just contact me. I'm happy to take a look at your current mortgage and then see if I can beat it and save you some money every month. Or if you're looking to cash out or new purchase, don't forget to reach out to me. All right. Thank you for watching and then take care, guys. Have a good holiday season. I will see you in the next video. Bye bye.